Folks, welcome. It's a wonderful day today. We're mining week here in BC, Vancouver, British Columbia. My good friend here, Chris from OTC Markets, Chris King, has joined us today to help present CSE Talks, raising capital and listing in the United States. We have a very free-form discussion plan for you this morning. So myself and Chris are going to speak for about 30 minutes on the topic of what it means to be listed in the US from the perspective of being a Canadian listed company. So that's where I come in, and the Canadian Securities Exchange. We operate a listed market here in Canada. Many of you know me, I'm James Black. I'm joined today by my colleagues Anna Sarin, Barrington Miller, and other friends that I see in the audience. Thank you for coming. I know it's a bit of an early start. I usually don't get to work at this time, so I had to pull some strings. But yeah, really want to thank you for coming. And we did this event last year, so a few things have happened since last year. I don't know if you've noticed, but CSE had a wonderful year. I might even go as far as to say it was a sensational year. We had records across the board as far as trading and fundraising on the exchange. We've reached the most listings we've ever had on the exchange. And thanks to many of you in the room, in Vancouver in particular, it's been a huge base of support for us. So I don't know if we're a red state or a blue state or whatever, but you guys have really been here for us all the way, so we really appreciate that. I will throw a couple numbers at you, and these are really easy to remember, for me at least. 1 billion. So we had our first $1 billion listing on the CSE this very recently, in the past couple of weeks, CanTrust Holdings. We used to be looked at as being the micro cap market that would feed listings to the venture and the TSX. And you know, we're starting to get a little bigger. We still love the venture business. That's really where we focus on, but it goes to show that you can actually grow something here of significant value. So we're really happy about that. Don't believe the last press release we put out. We actually underreported our financings on the marketplace. We had a third-party verified, and Barrington can vouch for this. Over $1 billion raised on the exchange last year. So again, you know, we've had great performance last year, but that's the big one. If people are coming to the market and raising money and then generating trading and liquidity, that's sort of the purpose. This is what we're here for. So. And on that front, the liquidity metrics last year were phenomenal. We had average daily turnover metrics, both on volume and value, that were many days better than other exchanges in Canada. So if you're looking at liquidity and measures of liquidity on a day-to-day value and volume perspective, we had awesome performance. So that being said, one of the other things we're really excited about, which we did last year, was engage formally with OTC Markets out of New York. We struck up a strategic alliance, and we took our show on the road back in November. We went to Israel and talked to them about the benefits of having a Canadian listing with an OTC quotation, both on the QX and the QB boards. And that's really what we want to do and talk about here today. Is we're going to have a bit of a deep dive on what that means, what's required from you as a company if you're going to be going that route, the benefits and some of the particulars. And then after our brief discussion, we'll go for about half an hour, have a quick coffee break. I'm going to bring up a lawyer, I'm going to bring up an accountant, and we're actually going to bring up someone who's doing a Reg A Plus financing right now and talk to you about some of the particulars of how you raise money in the US using that instrument. Something that we at the CSE and OTC markets are quite positive on. So without further ado, I'll let Chris introduce himself and tell you why he's here, and maybe cover any tracks I missed on the way.
Yeah, thank you, James.
And you can give him a hand, because he came all the way here from England and then the UK. And then
So thank you everyone for coming, and I'd just like to echo some of the sentiment that James has mentioned. You know, the strategic alliance between the CSE and the OTC has already gained great traction. The goal here really is to help companies be successful as they sort of grow and go through their journey of launching into the public markets and doing it in a cost-effective and efficient way. This is a message that, you know, we really look to get out there as a marketplace in the States. Our goal is to help companies grow, to help them do it cost effectively, to connect them with third parties who can help them on that journey. And last year, OTC Markets also had a rather astounding year in terms of, I think there were about 200 companies that came to our market, wanted to access US investors, joined our premium markets, QB and QX, but the common thread there is that they all had a stock exchange listing elsewhere. So we're not reinventing the wheel, but we're certainly committed to education and hand-holding and helping you guys sort of figure out where you need to be and what you need to do to raise the money and be successful.
Cool. And I forgot to mention Mark Francis, who's also here. He's one of our representatives, hand up in the back. He's great. So Chris, you guys make the effort to come to Canada all the time, and maybe we'll just spend a couple minutes here talking about the message that we put out there in Israel and now here in Canada. We've been pitching this for a while, but really the mandate is to try to steer people towards the idea of there's this maturation that's happened in your own marketplace with the QB and the QX. You've applied some standards and metrics around what you'll accept as listings on those marketplaces. And really, you have companies that come up here and they have ambitions. Either they're going to go to a big global board, or maybe they're going to go to US and go NASDAQ or NYSE, and they think that's the ultimate goal. But maybe kind of the same thing that we've had to work against, which is, why would you go that route when you can use your platform? What are the benefits versus that?
Sure. So I think I may have used this term last time around, but myth busting, right? So if you repeat a myth often enough, it tends to become the reality. So a lot of what we do is really just having these kind of meetings and one-on-ones to help companies understand that there's a reason why $210 billion market cap Roche listed out of Switzerland is on our QX market. There's a reason why Air Canada is on our QX market. We have the Aurora Cannabis and the Nemaska Lithiums out of Canada. There's hundreds of companies out of Canada that do this. But again, the common thread there is that companies look to the US and naturally want access to the deepest pool of capital, right? You want the liquidity, you want to grow the US shareholder base, you have a story that you know is going to resonate. How do you cost effectively access that marketplace? And the reality is that if you're already transparent and shareholder friendly and adhering to your local regulators, why would you want to then become SEC filing, Sarbanes-Oxley compliant, much larger listing fees, and the cost of sort of going public in the States when you're already on another stock exchange elsewhere just becomes very questionable. So the reason why you'll see Adidas and Heineken, Danone, BNP Paribas, J. Sainsbury, etc., there's hundreds of really highly respected, highly sophisticated companies with large IR teams with deep pockets that do their due diligence, and they look at the US and they say, if I can bypass an SEC filing requirement, if I can, at a very low annual cost, enhance the trading experience for investors and brokers, and have advisors recommending me, and have advisors disseminating research in the States without being on the hook for high costs and burdensome and duplicative reporting, that's really the value proposition that we provide. And that's where QX comes in. We talk about the larger companies to create comfort, but the reality is that 80% of the QX market adheres to the standards, but 100% adhere to the standards, but 80% are actually fairly small companies. So, these aren't mega caps or even large caps. Out of Canada, there's got to be 130 QX listed companies. You need to trade above 25 cents. You need to have a market cap above 10 million. And just to help better understand why those numbers, the rules are written to help brokers. It's not about prestige or credibility. One of the key things that you get when you join our premium markets is removing a lot of the restrictions that brokers and advisors have. So, as a market, again, we're always doing what we can to create comfort and help create liquidity and remove restrictions for brokers. This is not really about credibility and prestige for a company. You as a business don't change if you change the tier of your market. You're not buying credibility, but you are buying into a more freely traded area of our marketplace.
Absolutely. And it's worth noting, so the CSE is a qualified foreign exchange. Did I get that term right? Yes, right on. In the eyes of the OTC markets, we've had that distinction for a couple of years now. And what that allows you to do, so Chris mentioned a very important part, which is SEC reporting obligations. You can avoid the Sarbanes-Oxley and other things that are typically more, let's say, require a little more in legal fees and having that all covered by having a Canadian listing on the CSE. So again, your disclosure posted here in Canada on CEDAR and on CSE gives you the benefit of going to the OTC tiers and then actually using that disclosure to satisfy your requirements and the public's need for information. So again, Canada has, and CSE specifically, has a much more streamlined regulatory environment. It's simpler to use. We know this, and it really helps companies that go through that and then go to the OTC. If you just go straight to the OTC, then you start opening the doors to being SEC filing, and then you got to post on EDGAR, and then we start to hear the complaints. So that's important to define. However, so on the CSE we have about 100 or so. Actually, it's probably 120 now that are on QX and QB. the QB is by far the most prevalent of the two for our issuers. You talked about the QX requirements, but can you just touch on the QB and what is required to get on the QB and maybe some of the features of that market?
Sure. So I joined OTC Markets about 3.5, 4 years ago. And when the phone started ringing from Canadian companies looking to access the markets, the question was always, can I join QX? The reality is that QX is for established companies with some strength on the balance sheet. So I won't bore you with the SEC's definition of a penny stock, but again, the reason why QX is sort of the eventual goal for companies is that with higher standards, less perceived risk, and our compliance file that goes out to the JP Morgans, the UBSs and the Goldmans of this world, you're going to be treated depending on whether or not you meet certain criteria. So the QX is great, and we would love to take all companies there, but the reality is that QB is a really high quality market which provides smaller companies with the ability to ensure that they're seen as compliant with US standards. So this isn't about approaching the US market and saying, well, I have a grey or a pink ticker, so that's enough because I'm a transparent and shareholder friendly business in my home market. You get treated or tarred with the same brush as the company you keep. So again, that's the reason why QB was created, was that it's an SEC recognized established public market. It's really about quality, disclosure and transparency, as I believe a good venture market should be. It comes at a lower cost than QX, and it comes with a range of services to help you get your message out to a broader audience. So as James alluded to, you're using CDAR filing in Canada. We'll actually convert those financials on QB into the EDGAR format so that now your information is actually being disseminated throughout the financial markets. Your news flow is going to be hitting the broker-dealer screens through our news dissemination tools. QB is a great stepping stone. I think we're here to kind of partner with businesses as they grow and provide an effective and cost-effective solution as companies go on that journey. So we have a 1 cent minimum bid price requirement on QB, but the reality is that it's about being transparent and shareholder friendly, whilst also meeting the broker-dealer requirements that they rely on to be able to assess, are we going to take this trade and let it go through, or are we going to kick it back because we don't touch pink or grey or distressed companies that sit on that tier of the market.
Cool. We'll talk about share registration in a minute, but talk about market makers. And actually, let me make a point before I ask that question. So the real benefit that we want to provide people here with information, but the real impression we want to put is that this is a seamless way to access more investors in the US in the secondary market. I think it makes it more palatable to people who want to participate in primary financings, such as a Reg A Plus, eventually maybe. But the key here is actually being able to have your stock traded in the US in OTC style ticker. So in Canada, if you're on the CSE or another market, you may not have full coverage across all the discount platforms. And I think it's readily accepted here that these types of markets are heavily traded by a retail population that simply will not go to a full service broker to execute a trade on a penny stock. It's just not going to make any sense economically for them. So what we're trying to promote here is, again, the Canadian listing. You can get to the US through the streamlined process of getting on a QB or QX, and then you have access to retail in the US. Perhaps, Chris, you can tell us a little bit from your perspective how the market makers are involved on that side of the market, so that these retail investors in the US aren't just jumping across huge chasms to execute trades.
Sure, so that's actually a good point. And again, this sort of leads back to my earlier statement around myth busting. So we have a third tier of our marketplace, which we don't have a sort of a compliance process. There's no engagement with us for, which is the pink market. I'm sure you're all familiar with the term, or at least have seen The Wolf of Wall Street or something similar. The reality is that the pink marketplace is there to serve a purpose, and it's not for the issuer. It's not for the investor. So when I hear challenges around trading, and I spoke to a few companies at the VRIC yesterday, who their phone rings, right? It's US investors that are interested in trading the stock, but they're having challenges, and the company's sitting on the pink market. What we do with QB is ensure that we're working with brokers to ensure that there's multiple brokers quoting and making a market locally in the States. We want to make sure that the difference between the bid and the ask, that spread is narrow, right? No one wants wide spreads and volatility. And so the process that we go through with the CSE, you join OTC QB, the broker dealers are required at the first instance. There'll be one that's required to create the ticker by filing a Form 211 with FINRA, our governing body. But after 30 days, that ticker symbol becomes piggyback eligible. And so what that means is that all of the brokers that want or have an interest in trading the security are able to then jump in, use our technology to trade that stock. So obviously the longer term goal is grow the business, get up to the highest tier of the market that you can possibly qualify for. As we provide tools and services to help smaller companies grow efficiently, you're going to get your news flow out to a broader audience. You'll find that more brokers jump on board because they want to get a piece of the action. The spreads come down, and you get a more liquid market.
Yeah, awesome. So yeah, and maybe talk about some of the more functional parts of actually having a successful launch in the US. So we talked often about DTC eligibility, making sure your 2C11's filed, stuff like that. If you don't know what those are, I'll let Chris talk about it. I'll just make one quick point. Between the two markets, we often say that we encourage companies to go and pursue these quotations in the US because we feel like when you broaden the liquidity pool, if you allow more people to participate, you'll actually see intermediation with market makers that can produce trading flow between both markets. So we have the Citadels and Canacords of the world are sitting there to make sure that there's no huge gaps between what the Canadian price and the US price and the US market and the Canadian market is. And it's important to make that distinction that there's no technological issue there. There's no arbitrage that's going to happen and ruin your stock. So just to keep that in mind. But yeah, talk about, again, functionally some of the things. We mentioned DTC, 2C11, and I don't think this is a correct term these days, but PAL. Who are the gatekeepers and what are the things you have to do to make sure that you have a successful launch in the US?
Sure. Okay. So I'll definitely speak to those points. You sort of started to speak about the trading. Again, myth busting. The volume that we print on our market, and I think this is an important subject to create some comfort around. When there's a US to US transaction, FINRA requires that there's some visibility around the trades, right? So we have a section on our website that every company has that you'll see some volume associated with that particular issuer. But as James has mentioned, we're operating a market that's open during the same time as Canada. A lot of the brokerage firms have partners that are in both countries. So the reality is what's going to happen when a buy order comes in prompted through a QX or a QB ticker symbol, the broker then has an option of figuring out how are they going to execute the trade. And in many instances, the broker just comes into Canada. So it's one of our ticker symbols, creates demand, the trade is executed, but it'll be settled and cleared in many instances in Canada. So that's really I think one of the more interesting parts of our relationship is that, Richard Carlton said it many times, he sees it, he runs this business that sees when you turn the tap on and you join the US market through OTC, you see an injection of volume coming into the home market. So, it's one of the reasons why there's probably about 40 to 50 qualified foreign exchanges all over the world. The guys like the CSE that really understand what we're doing, we're certainly not a competitor. We're actually supporting the issuer. So you have happy issuers. You're supporting the home exchange, so the exchange is happy, and we charge a small annual fee. So we're able to grow our business too. So there's some good synergy. I'll talk very briefly about process. My cards are at the back of the room. I'd welcome a conversation with any one of you. More detail about your specific situation and what you're looking to achieve, process, time and cost. But in its very basic level, joining our markets is a fairly straightforward process. There's not too many moving parts. We have an application form, of course. We figure out which market you could slot into. And we'll work through the application process with you. But outside of that, if you haven't got a ticker symbol that has been created that represents your company on our market, it is a 5-letter ticker symbol. They all end in F for foreign, so it indicates that a US investor is buying a foreign or non-US listed security. But it is just the ordinary share, right? It creates the ability to buy ordinary shares anywhere in the world. So the way in which that ticker is created and then is provided permission for brokers to quote that security is by way of the 15C211, often just abbreviated to 211. It's a US broker-dealer that files that with our regulator, which is FINRA, the Financial Regulatory Authority. And so by way of having that sort of permission slip approved, the broker is then able to use our technology and go on and start quoting the security. And after 30 days, like I said, the shares become piggyback eligible. And it's on the issuer to execute. We can talk a little later, I suppose, about good practice, investor engagement. What is IR, and what can you do to engage a broader audience. I use the analogy of a gym membership. We're not here to sell you gym memberships that you're going to sit on the sofa drinking beer, watching TV all year, and then come back and sort of have a conversation around why it might not have worked. We're big believers in supporting companies as best we can. So we can talk more about how we get more eyeballs on the stock. But the 211 process is probably the lengthiest part of the process. I would say anywhere from 2 weeks to a few months, depending on your status and your history. And then the other moving part, which again is sort of a third-party process, is the sponsorship and the DTC piece. I'll address the DTC part first. The Depository Trust Corporation in the US is the equivalent of the CDS up here, right? So if you are like Aurora and you look at the US and you say, I want to create a massive pool, sort of a second pool of liquidity, you set up DTC eligibility, which enables shares to be lifted off the register in Canada and settle and clear electronically in the US. So it's not a requirement, I should be clear, it's not a requirement to trade on our markets. And if you're happy with the brokers just coming back to Canada to execute on the trades, then DTC is optional. But it is something that we tend to recommend because what it does is it enables some of the smaller brokers. We're not talking about the E-trades of this world. Some of the smaller brokers do benefit from having DTC, and a lot of them, the smaller companies and brokers in the space, sort of that's kind of a house profile that if a company's not DTC eligible, then they're not going to trade or quote the security. So I think it's a nice to have. It comes at a cost. It is a one-time fee, but it's, I would consider it part of the setup of joining our markets. And then the sponsor, yes, the PAL. So we used to call them PALs, Principal American Liaison. In the US we call them DADs, Designated Advisors for Disclosure. So there's a good reason we got rid of the term. We call them QX sponsors. What this basically means is that as a Canadian or a foreign non-US company coming into the US markets, as we've already said, you're joining the market in a way that bypasses, we don't have an SEC filing requirement. We don't have any additional sort of regulation or burdensome disclosure. So that all sounds great, but it also requires some due diligence on our behalf and your behalf to be able to ensure that you meet the foreign private issuer status. So yes, most companies on foreign exchanges would meet those standards, but there is an assessment that's done by a third party that enables, they write us a letter that basically says this company meets all of the requirements of QB or QX and they meet the foreign private issuer. It's a 12G32B is the rule. Anyone?
Write that down.
Yeah, we won't quiz you on it, but you're welcome to call me and we can talk in more detail about what that looks like. So that's the role that the sponsor plays. Many years ago, there was an ongoing sponsorship requirement, and it was clear to us that was becoming burdensome and costly for companies that were essentially joining our market, which is what they wanted, but they were on the hook for whatever the fee that third party was charging. And in some instances, there was great value, right? There were companies, investment banks organising roadshows, raising money and providing a plethora of additional value-added services. But that wasn't necessarily always the case. So we've beefed up our compliance team. We've done away with the ongoing sponsorship requirement. So we're able to do a lot of the ongoing assessment to ensure that a company meets the standards.
Cool. You mentioned Aurora. They're not listed here anymore, but we have many others of their ilk, obviously the cannabis space. We actually have those that operate in the US and have US interests. So one thing that is distinct about our relationship, which is something we can mention, is you could be a Canadian company or a US company, have US cannabis interests, be listed on CSE, and actually use that disclosure and port onto one of your marketplaces. Am I correct?
Yes.
Yes, so. And that's not a bad thing. From that perspective, it's a bit of a unique position because the national exchanges will not list companies of that ilk. So it's something to keep in mind if you're in that space and you're wanting to, say, be a California grower and be listed in Canada and actually have people able to trade your stock in the US. This is pretty much the linear path you got to go down.
Yeah, actually, so I saw a press release. I was talking to one of the advisors in the space not long ago up here in Vancouver, and there was even I think they had Aurora had sent out a press release speaking to that exact point, right? It was, we want to ensure that we're just as accessible and freely tradable as possible, so we've set up the DTC. Yes, we continue to be traded on an exchange. Yeah. Yes, we're traded on OTC QX, and we're doing all that we can to ensure that there's tight spreads, there's liquidity, we're accessible and visible as possible. So yes, to your point.
So it can be Canadian grower as well, or Canadian related ancillary, whatever. It doesn't have to be US related. So yeah, the US exchanges, the NYSE, NASDAQ, to our knowledge, we're not welcoming listings. I don't know if that's a function of SEC, but I mean they're a federal regulator and it's a federally illegal substance. So the two don't go together very well. Okay, any final thoughts or points you want to make before? I think I'll allow for a couple questions, and then we'll jump into a little break, and then we'll have the panel. But any final points you want to make? Anything I missed as far as a general overview?
Well, I would just say that to James's earlier point, our goal here is to keep this as seamless as possible. And I think the one thing that has come out of the alliance that we announced not long ago. We've got some work to do on our end to continue to just make this process easy for you, the issuer. So what I mean by that is, part of reducing cost and complexity of being public, joining the CSE, joining QB or QX, we're working hard to reduce the paperwork and the burden and the advisory around all of that, I suppose.
Yeah, that might be the most important part. So the strategic alliance that we announced back in November actually has some functionality associated with it. So one of the things that we want to start rolling out throughout the oncoming years is portability between our application documents. So for instance, if you file a PIF here in Canada, believe it or not, a lot of those headings and things you got to disclose can actually be shared, obviously opted in if you want to the US, to your regulator, so that you don't have to do PIFs twice or 3 times or how many times. And we're going to look at other ways that we can actually streamline that process so that when you come to CSE, your gateway to the US, we can cover a lot of the bases that they need through their QX or QB filings so that you don't, or the PALs for that matter, we'll probably be working with the PALs too, to ensure a seamless transition. So really being the only exchange that gives you that 1-2 punch right out the gate, that's the goal. So again, it's going to take a couple years to work all that stuff through the motions, because we obviously are both heavily regulated and have to make sure our own workflows are in alignment, but that's the goal. And that's the message that we're starting to tell. So I didn't say much about CSE other than we had a good year, but I'm pretty sure most people I recognize here are pretty familiar with our market. But if you do have any basic questions about what we do at the CSE, you're welcome to ask me now or later before we break for some coffee.